Hey, welcome everyone. It's been a while since we've done one of these free update YouTubes. We're busy with J Person Asset Management, long some positions in SPXL, long also TNA, and I think now's the time that the Russell should be a part of people's portfolios. We are seeing a breakout. Part of what we've got going on in our weekly advisory service, if I may be so bold, and get the weekly thoughts and observations in view for you guys here. There, you could clearly, here we go. All right, so what we are looking for is, again, this is this week coming in Monday, right? So bottom line, we've had quite an active week and sent out multiple emails. Sorry about that, but you got to take business when business is giving it to you, right? And so my concept is that we were looking to buy breaks, or at least to use this consolidation period to acquire positions, and that's what we took advantage of, and I'll get to that in a minute. Mainly, I'm still bullish, and as I say, until we get at least 2 weekly closes below quarterly pivot, as it says right here, then I'm very optimistic for higher stock prices through year's end. There's too many sectors that are underperforming that have the ability to come back up. Retail for one, and retail apparel, which we did have a position a week and a half ago in Under Armour, and we took advantage of that higher open. It could have been a mistake, but we did take the profit in the upper 19 level. Under Armour announced that it was working with, 2 things happened. It said it was working with Richard Branson in Virgin at Galactic and making their spacesuits, and also the CEO change up. So they had a cultural issue. I guess they were taking executives in the company out to strip clubs. It's probably not a good thing in this day and age. And again, this is not an era that we can just get away with freedom of speech. I mean, we can get away with freedom of speech as it's cordial and nice and doesn't have negative derogatory things. So, one of the things that is probably foremost in the news about that, in regards to that, is the Ken Fisher Investment Advisory and Money Management, where he made extremely derogative comments towards women. And he just got, I think, about $2.5 billion pulled out of his fund. Fidelity yanked money out, and wealth managers in the San Francisco area also yanked money out. So, this is an era where we should start to learn to be more sensitive to others and not be so caustic. And, maybe in certain circles you could joke around and be funny, in a humorous way, but not in a derogatory fashion. It's pretty crazy. So, but with that stated, there's a lot of people that feel in that line of thinking that they don't want to invest in tobacco or medical marijuana sector, or they're very conscious about society and social benefits. And so energy, for example, I'm just very much a capitalist, and I like to trade anything that moves. And so what I do in our advisory service is real simple. Number one, I just like to put out what we're doing and be fully disclosed. And so we've been trying. We bought AT&T, we got out. We bought CBS, we got out. I'm trying to get back in. It ain't going to happen. Ralph Lauren, we bought into Ralph Lauren. 50%, we were trying to add. That ain't going to happen. We now have rolled into buying it December 20th, by the way, 105 call. Not a lot of volume, not a lot of open interest. There's probably 20, that's me or us. And I think that by the day's end, we should see that Ralph Lauren, I think by December 20th, Ralph Lauren could be at the 108, 114 level, and that would be a pretty decent play. Regions Financial, we bought that dip and almost got, the other day, it was one of those dumps before the pumps. And then NetApp, we actually took a profit on. So this will change. This is our weekly advisory service. A couple other things that I know that many of you we did a big thing about how to do spreads on Thinkorswim. And quite frankly, this spread right there, the other day, was up just in one day about $1,200. So buying cattle, selling hogs. You're buying December cattle, selling hogs. Big trade for our commodity traders. Buy the pound, sell the franc. Big trade there. Now, I don't know if this buying gas, selling crude oil, that's also a very, very strong seasonal tendency. When I put out my seasonal trades, these are seasonal spread trades, by the way. even if you're a stock trader, it's important to look at these because it gives us the ETFs that are commodity based, so that you can, whether you're trading ags or maybe looking at the news and saying, hey, China's going to buy hogs. Well, guess what? China's not stupid. They're not going to buy hogs at the highs. They're probably in here accumulating these hogs, you know, somewhere near 64 cents down to 62 cents, and I would say they're going to lock in some prices there. Anyway, I'm not here to talk about a lot of spreads. I am here to talk about our current position. We don't have Under Armour. We took the profit. We don't have Netgear. We took a profit. We do have Ralph Lauren. We still have half position in Cardinal Health. We still have Pfizer. We still have GE. And instead of GE, at 10 bucks, we're an average long at 10 bucks. But however, wait a minute, when it was before the last earnings, and we carried this position a long time, what we did is we bought an in-the-money 1050 put when the stock was trading at 1060 and paid 38 cents for an in-the-money put. We locked in a profit. When GE went down to like 8 bucks, we bought back the short side or we bought back that put and we profited from the put. As the stock goes back up, we're now made money on a downside action, and now we're making money back on the upside in GE. We're back into another earnings season. So what did we do? GE's at 9 bucks. We bought the December 20th $9 put. So we got, again, another put option. We're just put on some protection. Now that one we paid 50 cents. So we're now digging into not profit as much as being maybe break even up a couple pennies, but still holding on to GE for the next earnings report that comes out in another week or so. So anyway, there's our 2 cents of what we're doing. Let's look at the tape. As you can see in our board, this is, I want to expand on my chart here using Thinkorswim. This is our live trading room. And you will note that this green dash line with that little arrow, I said this is a last conditional change. We need, and I said, we need to close above that green line in the sand. Yesterday we opened higher, smashed it, didn't initiate a long. And I said, gang, if we get, and you can see in the live trading room right here, I said, if we get a close above 154.56 in IWM, it triggers a buy to add, that's bad spelling, typo, to IWM call spreads, which we're in, which I shared in the newsletter, or buy TNA. And as you can see, we got the close right there, and it broke out. Big trade. So, again, our last conditional change, and that was something we disclosed in this book 15 years ago, the last conditional change. It's an indicator. We have it up in our trade station as well as our other programs that we have. This is very powerful, and a lot of you guys, if you've seen on our YouTube channel, we've updated some old teachings and old courses on how to trade momentum with Forex and what indicators kind of work. Well, the last conditional change is very powerful. And a couple other little things I'll get into in just a second. So, Tilray. Yesterday we bought a little breakout in Tilray at 22. We bought into that little buy signal right there. It gave an insane little profit for a day trade. If you may, you could see this right here. Tilray, time to buy pot stocks, 53%, excuse me, 50%, 23.40 or better, 50% on a daily pullback, good to cancel, so 23. So we're up a little bit of money right there. And, you know, I even said yesterday, wow, that was a blow-off on a $20 stock. I mean, it definitely smoked some bears out of the market and gave people an opportunity to make over $1 on it, even if you wanted to day trade that. So what we are looking at, and now look at Amazon, which opened lower, traded higher, and now it's, you know, only down 20 bucks on a $60 expected move. So this was a tough trade right there in Amazon. Other stocks that we picked up this week, Holly Frontier. We're in Regions Financial at lower levels. The financial sector is breaking out, and we have a great participation coming in the financial. So we got transports, financials, we've got semiconductors. This market is firing all cylinders right now, gang, and it's not, you know, just looking at the price breakout, but it's also looking at the breadth of the market breakout. And so that's why we wanted to get exposure to some discretionary retail apparel, Ralph Lauren. We wanted Cardinal Health, which we still have a position in, making money. We trailed our stop there. Occidental. This is at levels not seen, by the way, since 2006. And if oil and the global economy picks up, if OPEC cuts back, these guys are going to make some sick money. So this is a low-risk value play longer term in Occidental. Nordstrom's. You know, the family is trying to sell this company out, but I know it's the holidays and it's coming up, but something special is happening with Nordstrom's in this move. And I'm not sure if it's just because investment, that someone got the memo and they're circulating around Manhattan, so all the investment advisors are buying it, but something special is happening in Nordstrom's. All right, let me switch pages here and share with you our algo. So again, we have two trading rooms that run at the same time. Stock, options, and again our algo room. As soon as the algo populates, we will share with you. It looks like we already exited our long position in a day trade on the ES 5-minute model on a compression stop. Let this, give this a second. It should be coming right in. There it is. Okay, so first and foremost, this is our algo room. It went long the 5-minute model. Why do we have two models? 5-minute is lower risk, more frequency. 15-minute, higher risk, less frequency. Longer holding periods. It's a 15-minute bar. It's 3 times the amount of a 5-minute. So the risk is probably greater. And so therefore we have a lot of day traders that want to say, maybe I'll just take the 5-minute signal rather than the 15. Up here you can see the advanced decline and that's the point I wanted to also get with you guys here, is that we started to see this morning a huge increase in volume well before the defined breakout. And then note that the advanced decline at that specific time, the orange line are advancers, the blue line's decliners. The advancers started to outpace decliners. Now, this is not the advanced decline that your grandmother or grandfather used to trade, which is based off the NYSE that some of the financial stations still talk about. This is the advanced decline on the S&P 500, and that's my work. Something that I came up with back in 2008. We put it on Genesis Financial. We put it on our TradeStation package. In fact, let me irritate our traders in the room for a quick second. This is the advanced decline work, the cumulative ratio line that we developed first with Genesis Trade Navigator. Phenomenal program, fantastic product that I still use on a daily basis. This is TradeStation. And I was able to program the top 6 stock indices using advanced decline. So if you look here on your screen, you can see that I got a bunch of monitors right here, so I'm staring at a monitor up here and I'm projecting for you guys on this monitor. Moral of the story is we have an advanced decline breakout in the IWM, and this is a leading indicator. And we also had a new high breakout in the NYSE. Now that's good, and that's what old school traders would be looking at: the tick, the ARMS index, and the NYSE. And the NYSE, and I'm telling you straight up, and that's why we're bullish, that's why we've been bullish, we maintain bullish structure in the market, is because I have never in my almost 40 years of trading seen an advanced decline break out to new highs without the pricing breaking out to newer highs. This is a very special market. There's probably a melt up coming, not a meltdown. More people are looking for that recession. They're short bought the market. They're not in. And maybe there's a lot of wealth managers that didn't believe in the global recovery or how things are doing. There's one stock that I've been telling all my clients about, one stock that is probably my best harbinger, and it's called Illinois Toolworks, ITW. Now, if you own a boat, you probably bought some of their products for cleaning, aluminum refinishing. They have all types of products that they make. Illinois Toolworks. Besides auto parts, they're a real major industrial diversified products, material, and parts company, Illinois Toolworks. And if they go up and they have a lot of exposure in the industrial business, then that's a good sign that there's really undertoned health in the global economy. Illinois Toolworks knocked the ball out of the park on earnings, ITW. Apple. As go Apple, so goes the economy sometimes, right? Apple's done very well. So being bearish and looking at bearish market overall activity has not been the play. And so I know that while John Person and Person's Planet doesn't have this huge following, we have huge quality of information that we put out. And also, I try to do things that are unique in that I don't follow the herd. I put out information and I've modernized indicators that give us a better edge in the marketplace. Just like advanced decline, I didn't invent it, but what I did invent was a specialized McClellan oscillator that relates to just the S&P 500. I'm not trading the NYSE. You're probably not trading the NYSE, but you are trading the S&P 500. And the NYSE has a different component weighting makeup than the S&P 500, just like the NASDAQ 100 has different weightings between technology and biotechnology. The Dow Jones, large cap blue chip stocks. The Russell, non-performing non-dividend paying companies that are growth stocks. And if you're looking for a recession, you ain't buying the Russell. But if there is no recession and these small cap companies do well, guess what? It's going to be explosion to the upside. So anyway, we do have that little breakout happening right now in the Russell, and I think people should have a little bit of exposure to that at this point in time. That's my little message. We'll see. I have a little, as you see here, Friday rule. I probably shouldn't disclose this, but what the heck, it's already in front of you. I have it in this book. No, I had it in the book before this one. I've only put out like 4 books, 4. And I'm supposed to have the second edition of this done 3 years ago. Instead, I'm talking to you guys instead of writing it. Basically, the rule, the observation that I had some 22 years ago was that I noticed that on a Friday, because the S&Ps tended to trend a little bit better back in the old days, but on a Friday, day traders, they'd get in the market not realizing that, it's a Friday, right? And people get very stubborn. Small speculators get very stubborn in their position. If you think the market's going to go down and it can't go any higher, right? Because that's a mindset a lot of people get into. They don't like to buy high. They like to sell high. And so what happens is they sell, and then the market goes up, stops them out, and then they do it again, and they got to stop, and it stops them out again. Well, generally between 10:30 and 12 noon, whatever that trend is, then you get a counter trend move at lunchtime. So if the trend is up from 10:30 to noon, the market goes up, and then it kind of settles back at lunch, and that's when they go, oh, look, see, the market's topped out, and then they get short. And then all afternoon, the market goes up, maybe grinds against them, and they are forced because it's end of day, there's no Globex trading, there's the weekend coming, and they have to get out. And companies like, if you don't get out, companies like Interactive Brokers will help you get out automatically, right? So companies they'll flatten your trade out whether you want to or not. And by 4 o'clock Eastern time in the ES, some of these companies, if you're still in and you're under margined and on the wrong side, they will liquidate your position for you, especially if you're not fully margined, okay? So that is one of the issues that if you're short, it brings the market back up and you get these really strong, exaggerated moves on a Friday. So that was my observation way back in the day, and it still holds true today. Is it 100%? No, nothing is. But I tell you what, it's a good 65, 70% accurate in one thing that we follow. So I hope at the very least, we tend to put a lot of good things on our videos. The last video I did with the spreads, we talked about the spread between the Russell and the S&P, but you had to wait to the end of the video. So I started off with cattle hogs, and that was a huge money winner. But if you weren't interested in cattle hogs, but you were interested in using spread or learning how to use Thinkorswim spread charts to identify maybe potential strength in the Russell, that would have helped you, unless you didn't look at the whole video. This Friday 10:30 rule, obviously, if you're listening, you've watched the entire video. With that said, if you like what you see on our free videos, imagine what you're going to get with our advisory service, because we definitely put a lot of work. We have tremendous performance this year. Alpha is off the charts. We're having a great year. And I look forward that if you are interested in learning how to trade better and more consistently, join us here at personsplanet.com. Now, next week, I'll be real busy. next week, not only is it Fed FOMC meeting Wednesday, Thursday, Wednesday, Tuesday, whatever, but also we have Halloween, but we have our three-day live trading seminar. So we will be doing our live seminar down here in North Palm Beach and Palm Beach Gardens area. And we're really excited to have a bunch of our good clients with us. If you want more information, visit personsplanet.com. And if you like what you have to hear or have seen on our YouTube, give a thumbs up. If you don't like what you see, tell me why. But other than that, we hope you subscribe and come back and follow us more on when we do these videos. Thanks again, everyone. And by the way, don't get short quite yet these markets. Thank you.